This is Tom Nunamaker with Capital Discussions. This is my trading update for Friday, September 5th, 2014. So the market today opened a little lower and then had a nice rally during the whole rest of the trading session. And if you look at the VIX was up to about a little over 13 and kind of drifted down and closed at just over 12. The VIX futures are these horizontal lines. Those are the, September, October, November futures. They're definitely in contango, no risk of crossing and going into backwardation. So market's basically calm and relaxed at this point. The euro had that big drop off yesterday. A friend of mine who has a few people trading for him in Thailand said they made 347 pips yesterday in 3 contracts. So they were taking today off. It's a nice trading for them. The euro today opened a little higher, got up to about 129.90 and closed at 129.64. So basically just up a little bit. Here's the ES futures, and you can see the volume is for this heavy volumes for the US market. A little choppy in here, so that'd be hard to day trade, but a really nice trend for the rest of the day. So with that, let's take a look at option view and see how our positions are doing. This is the 6E futures options position. Underlying is the December contract for the euro. This expires on November 8th in 64 days, so still quite a bit of time on this trade. We are down $1,000, but remember we had that massive drop, and here's the price chart. Boom. And here's what the position looks like. So we're basically stable right now. T+0 is pretty flat. I'm just making sure it's going to stabilize. We're just slightly positive delta, which was good because it came up just a little bit today, but we're trying to get up, in this area. If I put on another line, maybe this, and as it starts moving up, we'll start raising this up, but we're just trying to protect ourselves if it wants to really motor on down to the downside. So that's the euro position. Basically kind of a cat and mouse game, wait and see. Again, there's a lot of time left, so even this line is 3 weeks away and a lot can happen. So the banks, the ECB has spoken. There's probably no big announcements coming out anytime soon, but the markets are fickle, so we'll see what happens. Let's move on to the SPX trades. The SPX trades, this is the one that expires in 14 days on the 19th, and this is actually looking at all of them, so let me just isolate on that one. We're up $885 on this one. This basically makes up for the loss on the euro, right? So we're kind of balanced there. It did rally today. It would be nice to have a little pullback and get up maybe in the $2,000 range over the next couple weeks. But if we look at the T+11, so this is a week from today. If we can get down just a little bit, down in here, that would be a nice return. But for now, we are still up. We're up again on this part, 885. On the December, that's a pure butterfly. That is down 200. Vega comes into play on this one, 149. So as volatility goes up and down, this is going to change quite a bit. If we go up a point or down a point, it moves these lines quite a bit. So we're just waiting for this to do something. And for the short-term one, this expires in 8 days. So this is actually up 1262, and we are in the 10. So it's maybe going to give us an extra gift at expiration. We'll have to see. But we are about $40 above the baseline of 1222. So at this point, we probably are better just hanging on to it. If this really starts to expand and gets up into here, if I add a few lines, and let's see if I make this T7. Let's see what that looks like. This is the day before expiration. Could get up here. So that is in the 1330 range, 1320 up in here. So we could add an extra $100 and going into expiration. If it's in here, I'm just going to let it expire because there's a pretty good chance it'll, hit one of these. So we'll see how that goes. The combined position is up 1950 and looks like this short term. Now if we expand that expiration to 919, then it looks like this, which is still pretty nice. If we go to it's 14 days, so we would like it to sell off, obviously, because then we're going to get a nice bump in profit. But let's see where it goes. It seems like it wants to hang around 2,000. And if it does, this thing will still go up a little bit, but the main player for that would be our December trade. If it keeps hanging around here for another, well, it's going to hang around for quite a while. We really don't get some serious money until we get into, say, 2 months from now, about T plus 53. And some really nice money if we go 80 days from now. This potentially could double our investment, but in 2000 bring in over 4. So those are really nice returns. But Jim's gonna let it go. I'm still not convinced I want to do that. I might take some partial profits if I get there and then leave one kind of riskless lottery ticket, but I'm not going to leave the whole 2000 there for another 105 days. I'm probably going to pull it off earlier with a profit. That's the goal anyway. So anyway, that's our positions. We're overall the SPX is up about 2,000 and the futures options on the euro are down 1,000. So overall net we're still positive territory, and that also goes to show that it's good not to put all your eggs in one trade, because if I had my whole position in this euro futures option Weirdor, I'd be down for the month. But because I have positions in different types of assets, this is a currency-based trade versus the equities, they're behaving a lot differently. The euro is crashing, but you look at the SPX and it's basically going sideways. See right here. So they're behaving completely differently, and the returns are complementing each other. So that's nice to have multiple trades going on at the same time in different instruments, and not necessarily all indexes because they're all going to rise and fall together, but split them up. A few currencies, maybe something in oil like Merit was doing, or or maybe bonds. Those are a nice diversification. Let's take a look at the ZB contract, see what that looks like. ZB, there you are. Okay, so the bonds are actually behaving nicely right now, so this might be a nice time for the bonds. Maybe a slightly bearish trade or sideways. We could do something like that. Maybe we'll put on a bond trade, and again try and diversify a little bit. The bonds are traded differently. They're in what are they, 30 seconds and 64, so you got to think a little differently with the bonds when you're reading the quotes. But that's my trading update for the week. I didn't get a new trade on today. I was busy doing some coding. So we have a new Infusionsoft account, so we'll be able to send out reminders to the roundtable and the market analysis more regularly. They're going to be the day before in the afternoon, and then before the meeting starts the same day, about half an hour before. So you'll get all the logins for that. And next week, Len Yates is going to join us on Thursday. He's going to talk about some of the intricacies of Option View, which I'm looking forward to, and also some of the new tools or things that he's got built into Option View for earnings. So I think we'll be very interested to see what Len Yates has to say. So with that, have a great weekend, good trading, and I will see you next week. Thanks. Bye.